All right, welcome back to this presentation. Today is Saturday, and like we all know, I come here every week to share my screen and my analysis. So, but before I go there, I want to do something. Just a second or two. One, two, three. Okay, fine. Before I go into this analysis, I want you to do something for me. Just click on the subscribe button. It doesn't take anything. Just subscribe. Man, click on that button. Like, no. One, two, three. Good. Thank you for that. So now, it's very much to share my screen once again on two pairs, like I always do, gold and USDJPY. Before I go into gold, if we notice, gold has been on a massive bullish trend since it broke out of that resistance. It was last 2 months ago, and that was because gold is now an official store of wealth for central banks, and we all know prices will always go up, and since the store of wealth, the price is going to be higher than currencies, higher than different currencies of the world. So that's a difference. That's the fundamental tenet of it. So, but now, throughout last week, if you go to your charts, you'll notice something. Gold has been on a very will I say nasty, or a very clean range. Let me use that word, clean range, on the 4-hour chart, which I use as my entry. If you check your 4-hour chart, you understand that gold has been on a very tight box where it's trading in between a minor support and a minor resistance. It's just bouncing in between. Although it broke out with a 4-hour candle close, that was Friday, I think. But throughout Monday to Friday, it has been on that range. So that's why if you check, if you're, let's say, a scalper or something, you can only catch a few pip in that 5 minute time frame. Because but if you're trying to buy, you get to a point where you want to buy, you see that the price is going up, and at the end of the day it gets stopped out. It's because of gold has been on that bullish trend, on that range. On the other hand, USDJPY has been, like, analyzed. If you watched my former analysis and my review on USDJPY, I said when it breaks below a particular level where I mapped out, that is going to crash further to 148 spots 25 to 50 price level. That's where it's going to end, and that is where the bullish trend might continue from there, because it's all the way from the monthly time frame and the weekly time frame, which are higher time frames. If you check, when it broke that level that I set, it was a support level, and I said once it breaks this level, it's going to tank all the way down to that support. There is a very strong support where it's resting now, and we can now, maybe from next week, from Tuesday, when it's done fulfilling its entry to that level, we can expect a bullish trend. But for now, till Monday, Tuesday, I think the price will be very much bearish. Same thing applies to USD CHF. They are on a positive correlation for now. They are moving at least on the same trend. But gold is different. Gold is bullish. USD JPY CHF is very much bearish. So if you stick around to the end of this analysis, where I'm going to share my screen on what I actually mean by these levels, the key supports and the key resistance. These are the major resistance, all the way from the monthly and the weekly time frame, not the daily. Daily is where I come to see the market structure, where you see what the market structure is, where it's at the moment. Is there a double top forming? Is there a head and shoulder, inverse head and shoulder, double bottom? All those market structure is what I check on the daily time frame. Or on the 4-hour and the 1-hour time frame. The 4-hour time frame is where I want to confirm my entry. I want to enter after a 4-hour candle close below or above a particular level. Then on the 1-hour chart is where I come to check if I want to break even, if I want to take partials. I do that on a 1-hour chart, where I check, okay, if price have gone from, let's say, 20 pips and it has done over 150 pips, I say, okay, let me go to the 4-hour and see if there are signs of reversal. This is where I'm likely to add to positions or start closing out my positions. The 1-hour chart, we all must remember that the lower time frames are where reversals take place. This is where it starts to build. It doesn't build on the weekly and on the monthly. Monthly tells you, okay, it is up. But from the lower time frame is where the foundation is, where the base is, where it starts to tell you, okay, I'm done fulfilling these levels. I want to change. I want to form this trade that is going to be in harmony with the overall chart and the overall time frame. So do well, and I want to see you on the screen. So let's go. Peace. Okay, welcome here inside my screen where I'm going to be analyzing these two pairs, gold and USDJPY. Well, what I said gold is very much bullish because as you can see, this is a weekly time frame. This is a weekly time frame, as you can see there. And again, this very much shows me that this I just mapped out this straight line to very much make viewers understand why I said gold is very much bullish, because this was a very strong resistance when it broke above it and made a weekly candle close. Since then it has been trying to get to this $3,000 per ounce price, but until it gets there it can very much double inside this range. However, was it 2 weeks ago I made analysis. I said I took partials from here. I'm waiting for it to touch, get close to this place or above a little bit about it or above it, so I can start buying from there. However, throughout last week it has been on a very strong range on the 4-hour chart. I didn't touch it last week. This week, I mean to say, we are still in this week. I didn't touch it when I saw it inside. It broke out from here and it got here. This was where I started. I took partials from here and I was taken out, but we did by the close of this candle, and I remember I took something from it, but this candle took me out. So I was waiting for it to very much maybe get closer to this resistance that is now support where I can now buy. However, it didn't. It got close a little bit shy above it and it rallied back up. However, when it got back up here, it's made a kind of, it has been trading inside this range on the 4-hour charts. I'm not a day trader, I'm a swing trader. I like to see price come to me. I like to see what the price action is doing at the moment. It gives me the leverage to trade with ease and to do some other things I have to do, because you don't want to be in front of your screen every day. If you're always in front of your screen, you're very much going to be incurring losses, and it's not what you need. You want to know where the price is, where is price action going. This is purely technical. I'm not talking about the fundamental aspect of it, but on your technical side you have to know, okay, this is where price action is at the moment. Has it broken above a resistance or below a support? Once you've identified that and you say, okay, now it's trading below a support, what you want to do is, in as much as it's a very strong support, you want to be in a sell position. If it's trading below the support, all you have to do is to wait for it to make a pullback up using your fib level or whatever, then you can start selling from there. But now that is above the resistance, my main bias is to buy. I'm looking for buy opportunities. I'm looking for fulfillment of price telling me, okay, since I'm trading here, I want this to happen and I want this to happen before I get into the trend. So last week, this week I mean, on the 4-hour charts, as you can see, it was very much inside this range. I noticed it when it couldn't get closer to this support level, the resistance that is now a support, and it started trading above it. It made a high equal to this low, then it made a higher high, it made a higher low, higher high, higher low. However, it failed to make a new high, and since then it has been inside this tight range. And initially this was my entry. I plan to enter this trade after a 4-hour candle close above this range. My plan was, once I see a 4-hour candle close above this range, then I will start selling. I will start buying from there. Because if you should look left again, it started tanking all the way from here. It got closer to the resistance that was not a support and it couldn't get closer to it. It bounced back off, telling me that, okay, this, I think some buy orders have been fulfilled. It's now left for it to go to the overall picture, which is this price. This is where it's coming. I don't know when, but I know gold is coming to this place. But till it gets there, it's just going to very much act like a wave, to go up, down, up, down, up, down, until it gets to where it actually wants to go. Because this is the bigger picture, this is the bigger price, this is where it's going at the end of the day. So you want to very much position yourself whereby you know that is going here. All you have to do is to sit back, sit tight, and wait for price to fulfill this entry, and for you to enter, identify your stop. As you can see, this is 74 to 1. As a swing trader, although I'm going to add positions on this, but this is my overall. Once I see a candle close here, this is going to be where my stop loss is going to rest, just below the breakout points. Then my overall target is this. However, when I see some candle close, some candles trading above here, I will add massive positions to take it to this side. This is how I trade. I start small and I compound it. This is where I use leverage. This is how you use leverage. You only add positions when you are in a winning trade. You don't add positions when you are losing. So this is very much a very quick one on gold, and I want to move on to the other pair, which is the USDJPY. It's very easy. The analysis is very easy to understand. The same price pattern the same analysis I've been using over the years. Yeah, again, this is okay, what's wrong? Let me get something fixed. As you can see, price is very much making lower high, lower low, lower high, lower low, lower high. First, I have to go to my weekly time frame, where the base of my analysis is. This is where the bigger picture is. As you can see, this trend line tells us that the market is very much tanking all the way down to this trend line from the monthly. Let me go back to the monthly time frame. It's very easy to understand, a very easy analysis. There was a range here before, and when it broke out, it started tanking all the way down, and I knew it's coming to this trend line. This is a trend line support, and once it breaks below this trend line, the next is coming to this overall support, and this from here is where we're going to be expecting some buy opportunities. But for me, I'm very much bearish on USDJPY, because I've already known where the market is selling, where it's selling from the overall chart, from the monthly time frame. The monthly is telling me that this pair is very much bearish. As we can see, is for you to just identify it, then go to the lower time frame, like the daily and the 4-hour charts, where you're going to pick your sell positions. You don't have to very much trade every day or be in front of your screen if it is not necessary. All you have to do is identify the overall trend, then scale down while knowing the knowledge that the trend is going up or down. You scale down and you look for pullbacks. Once you see a nice pullback with your maybe Fibonacci or something, then you start selling it or buying it all the way from there. Identify your risk and know your reward, know where you're going to get out from the markets, from the trend, and where you're likely going to add positions to it. So from the weekly time frame, this is very much what I expect. Now that I've seen the weekly, it has broken this was a minor support. I made this minor support, and I said once it breaks, when I see a daily candle close below this minor support, automatically, if I should enter another trade, I'm not trading this pair for now. I've taken my profit. I started selling it all the way from here and to here, and I said once I see a daily candle close below this minor support, then I'm likely going to add another sell position to this general trend line, and when it breaks below it, I'll add another sell position to this strong support. Because why do I think like that is because when you look left, you will see this serves as a point of interest. Market can come here and bounce back up. Anything can happen. So the best thing is I use this as my TP. When I was selling from here, I took my profits from, and I said, okay, let me see what price does from here. If I should see a daily candle close from here, then I will start selling again to this trend line. However, yeah, as fate may have it, it's really happened the way I anticipated it. All the way from here, as you can see, this served as a very nice point of, however, it didn't reach the 0.50 fib level. But once if you one thing about when trades are running faster, it doesn't always get to the fib level, because trends will always do anything it can to keep traders out of it and make traders continue to chase them. But however, still with the knowledge of this, I've already known that since this is a daily candle close, now this is going to complete as another form of entry. I want to see this pin bar. Monday I want to see this was a kind of pin bar telling me that okay, if I should see another daily candle close from here, automatically it's going to come to this trend line. However, for me to start selling, I want to make sure I see price action even on the 4-hour chart trading below this massive support. Once I see any 4-hour candle close above it, then I'm no more interested in selling. I want to see whether it's going to counter this lower height. Sorry, I want to see if anything happens. Once I see a daily candle close above here, then this trend is very much taken out. Maybe it's going to start rallying all the way up, or it will take some sell orders to continue its bearish trend. So this is very much simple on the 4-hour charts where I look for entries. It's as simple as that. Now that I've seen this, all I have to do is wait for a 4-hour candle close, a 4-hour candle to get to this support, play around it, and come back to this place. It is here I want to start selling from here. If I'm to sell this market again, although this is a very tight race to reward, if I'm targeting here, else I'm targeting the overall support, which is down here. For quick scalp, I could say okay, let me see what it does from here. I want to see a 4-hour candle close, get here like this, maybe start here, get here, play around here, then come back. Something like this. Sorry, let me use this. Get here, come back. This is a very much easy and simple analysis using the multiple time frame analysis and the top down analysis. Is you being able to, as you can see how I analyze it from the higher time frame, from the weekly, I've already known that this pair is very much on a strong bearish trend. And as you can see, there is a trend line here. If you should draw your trend, you see that this is a very much lower high, lower low, lower high, lower low. Is coming to make a lower high, a new high. Then from here, once I see a 4-hour candle close below here, another one forming, then I'll start selling to this new low. It's as simple as that. That's if I'm interested in continue this trend. So but until then, this is a very short one on gold and USDJPY analysis. Gold, I'm still favoring the bullish trend, while USDJPY are more of the bearish trend. So it's an easy to understand strategy. When you know if you're a swing trader or you're a scalper, you can use this analysis and this strategy to very much know where to base your bias on, and very much understand what price does at whenever it fulfills a particular criteria. You don't, so at the end of the day, you don't end up trading without a bias, or just opening your system and you're looking for quick position, because once you don't have a context, you're already out of the game. You have to have a context of where you're trading, where is the market at the moment, and where is it headed. Once you know these two things, you know where you're going to exit before entering. Once you know that, you already, at least you have 50% chance of winning. But once you don't know what the trend is talking about, then you're already out. So I want us to go back to the entry. This is very much a short one, and see you on the next one. Alright, we've come to the end of the analysis and presentation. I want to thank each and every one of you for sticking around from the beginning through the end. It's very much simple. When you subscribe to this channel, you do yourself good. At least you can even come on a Saturday or Sunday, watch my analysis, and use that bias to trade the market on the next week that is coming on a Monday. It's very simple. I analyze and I drop my bias every weekend. Your work is just to watch them. When you watch them, it will give you an edge to know that okay, let me watch out what this guy is saying. Once price fulfills that particular criteria of entry, then you can start selling or buying. It's as easy as that. Like if you watch, I analyze from the higher time frame, from the monthly, I scale down to the weekly. Sometimes I go to the 3 months, I go to the 6 months, and I scale down to the weekly where I have already observed the chart pattern. I go to the daily where I want to see what chart patterns are doing. Is it kind of, am I seeing a head and shoulder? Am I seeing a kind of pattern forming in the daily time frame? Then the 4 hour is where I want to come and notice, okay, what's price doing at the moment? Where am I? I'm going to notice if price action is on a range, just like on gold that is very much ranging on the 4 hour chart. Once I see this, then I say, okay, I now sit back and wait for my entry to fulfill itself. Just like gold, as you can see, I've already mapped out the risk to reward calculator where I'm going to enter and where I'm going to exit. Likewise, USDJPY is very easy as that. All you have to do is, once you understand the context, where is the pair at the moment, where the pair you're trading, is it up or is it down? And you can do that by analyzing from the higher time frame, which is the monthly or the weekly. When you know that, you go to the daily time frame to very much organize and see. It's like a kind of, when you zoom out, if you zoom out, if you're using let's say a sniper to look at something, you know you have a target, but when you zoom out, you know where that thing is going. Imagine just like tracking a moving van. You have to first zoom out to see the road where it's following. If there is a track road, you have to know, okay, if it's going to turn left or right. You have to know, you only know that when you zoom out. Then when you zoom in is when you want to take the target. So it's as simple as that. And do well to subscribe, comment, and share. So see you next week. Peace. Thank you.